Mahantesh Sabarad, Head Retail Research, SBICap Securities, is now joining us. Mahantesh, what is the sense on retail volumes that you're seeing in the market? Have retail volumes gone down quite significantly after November, or there has been an increase in the volumes?
Good morning, Pankaj. In fact, the retail participation this month, starting December, has been quite weak. Overall, market volumes are very low, if you would notice, and much of the volumes is really getting, taken over by FIIs who are constantly selling, and there is a corresponding DIA buying that is happening. So the retail participation is quite low in the markets currently.
Right. Do you expect it to pick up, say, probably after Jan, maybe once we have a couple of results, or you think it will take some time for retail participation to increase, or retailers would only prefer to come via the MF routes?
So there are two paths actually for the retail investors to get back into the market. One is the upcoming budget, which is likely to be early this time around, which is 1st of February. So there will be a lot of expectations that will get built around the month of January starting first. So we should see a fair degree of momentum coming at that point in time. And the second thing that we are really looking at is later down into the quarter or the final quarter of the fiscal year is sometime around March. What is the progress on the GST? And that should again start building certain expectations from the retail side.
Right. In terms of markets hovering around the 8100 mark, do you think markets is just trying to settle down? It's just trying to assess the impact of demonetization, what will be the GST rates, what can happen into US. So there are a lot of uncertain things now that what will be the sort of outcome, and that's why markets are just trying to adjust in terms of valuation.
Pankaj, in fact, it was true until I would say last week, because the major events that were scheduled up until then were keeping the markets sideways. But then we have had two major events already taking place. One is the Fed hikes has already happened, and the Fed has talked of a hawkish stance going into the next calendar year 2017. And the second event, which was a little earlier, had to do with our own monetary policy, where the rates were kept constant. So I think the heavyweight events are out of the market, and this big week beginning starting today, we should have seen some element of speculation as well as positioning coming back into the market to drive healthier volumes, at least for the second half of this month. Unfortunately, we are not seeing that because, like you mentioned, demonetization is an effect which seems to be weighing upon the market right now, because a lot of people are not clear about what's the eventual benefits going to be of demonetization, although the effects are already seen in terms of low consumption.
Right. So when do you expect a pickup to happen, or when do you think markets would adjust from this level? We can see a time-wise correction before we see an up move or a down move, depending on the data that time.
In fact, Pankaj, we had a conversation some time back, and I had said on this channel that we are not looking at the market going really below 8,000 levels. The Nifty will not fall below 8,000 because that's a good, strong fundamental support out there. As for the pickup in the markets, as I mentioned earlier, is that we are looking at January month as the month providing some useful amount of triggers as well as expectations. Chiefly the expectations of the budgets will start getting built up. So the market should start rising sometime around January. So for this next 2 odd weeks, we're going to see tepid markets.
Right. In terms of sector allocation, do you expect a lot more interest into the digital space? Because that's what is being spoken about. That's where incentives are coming. Do you expect digital to be a big focus point for markets?
Yes, indeed, it will be a big focus point for the market. There is a lot of thrust, there is a lot of backing that the government is putting behind digital efforts, and we are talking about digitization of the financial transactions. So the entire value chain spectrum is likely to do well. So it is financial transaction to begin with, which means some of the banks as well as financial institutions offering these kind of services are going to see an uptick in their business. The second portion is the back-end support providers in terms of the IT backbone or the telecom backbone. Those are the ones who are going to do really well, and then the final is the front end. The front end is in terms of what are those transactions which will become digitized, and what kind of consumption or services that will go up is to be seen. So this entire spectrum, banks to IT to telecom to some of the customer B2C facing kind of businesses are going to do really well. Right now the focus seems to be more on the backbone side, which is both the IT and the telecom side. We know that the telecom companies in India are not really doing well, so we're not talking about the telecom companies, but there are a host of companies who are doing a lot of work in the background. So IT support today, for example, take a look at Sonata software, for example. Or the RS software. These are ones which are going to buzz in the next couple of weeks.
Right. Mahantesh, amongst the banks, there is a digital play, but post this remonetization effort, once the currency is back in circulation, and let's say that there is some excess liquidity, there is ample liquidity with the banks. How soon do you see credit growth coming back? Because even before demonetization, credit growth wasn't really strong. In the run up to the budget, can we expect banks also to benefit, or do you think it will take a few quarters before the credit growth bounces back?
Okay, the credit growth indeed for the banks is very low, but there are, you have to make a distinction between the credit growth for personal loans or consumer credit loans versus the credit growth for the industrial side or the corporate sector. So the corporate sector is actually degrowing in terms of credit growth, but the consumer sector is actually was growing, I would say, was growing very fast, and that growth was arrested by the demonetization. So with remonetization happening, we will see a quick bounce back in the consumer loans. As it is, the interest rates are low and the banks are on the cusp of reducing their lending rates soon. So we should see consumer centric loans really start bouncing back a great deal from January. So a lot of consumer durable loans will go up, housing loans will go up, automobile loans will go up, and that's where most of the banks will see a rise in activity levels.
Right, so you'd pick the consumer facing banks.
Yes, so the likes of an HDFC bank, for example, or any of the major private sector banks are really consumer centric or consumer focused. So those kind of banks will quickly bounce back in an environment where we will have rates coming down, lending rates coming down.
Right. Mahantesh, you mentioned that soon the investors will start focusing on the budget since it's going to happen earlier this time. What do you think should be the play there then? If interest, December is a time where a lot of people don't take large bets, they wait for the new year. Foreign investors are also back. So starting January, what do you think will be in focus? Will it be the consumption names on remonetization? Will it be infrastructure and some of the rural names on what could be there in the budget? How do you position yourself for the markets starting the next calendar year?
So when we look at the budget expectations and which will start getting built up from January onwards, we have to really focus on what are those things that the government will try to energize the economy with. So one portion of that we have talked is in terms of the digital payments, but that's I would say is already moving in a self-propelled manner. So the government really need not push so much the digital transactions by offering too much of incentives or putting aside or setting aside a lot of expenditure for that. More importantly, what we are looking at is that the government will be driving up more in terms of its rural focus. There are important elections that are coming up, including the UP and the Punjab elections. So we will see a lot of rural focus coming into the budget. Therefore, things like what the government has already outlined in terms of housing for all is a major focus area. We believe will what the government will set aside in terms of its expenditure, or there could be SOPs made available to farmers as we go into the next fiscal year. So we're going to look at basically the rural economy and housing for all as the positioning from a market perspective.
In terms of fiscal deficit, if it is slightly higher or expenditure is slightly higher than the projections of revenue, do you think the markets will take it on the negative side?
Yeah, it would be negative because the government might, if you recall 1 year back when the budget was getting presented for this year, the market had a divided opinion about what the finance minister will do in terms of the fiscal deficit. Thankfully, he reined in the fiscal deficit target to 3.5%. So that was welcomed quite widely, and as we go into the next year, I don't think the finance minister will deviate from that task. So we will see fiscal deficit being reined in. We don't expect expenditure to really be such that it takes the fiscal arithmetic out of the budget. So we're not looking at that. There will be thrust areas that the government will have. And there will be some areas from where the revenue garnering will be much higher. So we're not really worried about the fiscal deficit actually losing its momentum. It will be tightening. It will be lesser than 3.5% that we had seen for the year as the budget. So we should see somewhere around 3.4 or maybe 3.2 if the budget is bold enough.
Can you also just tell us about one change in the sector that has been since demonetization has been NBFC? You focused about banks and what can happen over there. But do you think NBFCs, if the correction continues for a while, maybe 10-15% lower than what the levels are, some of these NBFCs would become very attractive?
See, Pankaj, it is very difficult to get into the NBFC space, especially when the entire remonetization has not really happened. Moreover, remember that a lot of these NBFCs are either cash dependent, number one, or which is indirectly cash dependent, or they're dependent on such banking channels which are not part of the current remonetization effort. What I'm referring to is essentially the cooperative banks. So in such a situation where cash is a problem, the cooperative banking sector is not really participating in the remonetization effort thanks to the permissions not being granted and so on and so forth. The NBFC space is unlikely to do well for the next probably 2 quarters, not even 1 quarter. So I think we should be staying away from the NBFC space, however attractive or however steep falls you might see. But I must say that some of the NBFCs, which is chiefly the housing finance companies, will remain untouched by this demonetization. The others are quite dicey, so one would rather wait for a much deeper correction and wait for the correction to happen really before we get into that space.